This is the CFPC Banking CX survey, and we're going to take you through the findings of that this morning. For those of you who don't know me, my name is Alex. I'm the Director of Operations for the ANZ region, Australia and New Zealand for CFPC. I've had the opportunity to work with quite a number of the organisations on this call and many of you individuals as well. But for those of you who don't know CFPC, we're a management consulting firm that is focused on customer experience. So we focus on operations that support the customer experience. We work a lot in contact centres, retail, so face-to-face environments, and then online, like mobile apps and websites. And our entire focus is on improving operations that support the customer experience. So as I mentioned, there's been a bunch of organisations that are on this call that we've worked with. We've been in Australia for about 20 years or so, and globally about 25 years. So you may see your organisation listed there, either your current or your past organisation. But let me put that aside, and I'll get started on the actual survey and some of the findings from that. Now, as my colleague Lena mentioned, you should have a Q&A button at the bottom of your Zoom session, and that enables you to ask questions at any time. We won't be responding to questions in real time. We'll respond at the end of the webinar, but that doesn't stop you. So please, by all means, enter those questions as I'm going through, and I'll try to address as many of as I can at the end. I've scheduled about 10 to 15 minutes, so if I keep to time, I should be able to get through several of them. So please, I welcome your questions during the webinar, or you can reach out afterwards with my contact details, which is towards the end. Okay, let's talk a little bit about this survey so you understand essentially where it came from, who we spoke to, and what types of things that we discussed. So it was based, the population was targeted at Australian banking customers. So I should clarify, adult Australian banking customers. So people above the age of 18 and who had a bank account of some nature, a bank or credit union account in Australia. You can see on the left-hand side there a small histogram. It's just breaking it down by age. So roughly 2/3 of the respondents were between 18 and 44. The remaining a third above the age of 45. Perhaps unsurprisingly, when you look at who their bank was, 75% of people said that their bank was one of the big four banks. The remaining 25 said a combination of different banks. So we had Suncorp, Bank West, Bank of Melbourne, Bank of Queensland, Bendigo, HSBC, ING, Teachers Mutual, loads of different banks. And I actually think from the registration list, every one of those banks I think is represented here. So I'm glad to have a good group of different organisations on this call. And then in terms of the tenure with their banks, well, we're asking the Australian public, so it was really quite varied. There was about 5% of people who said that they've been with their bank for less than a year. At the other end, there's 15% who said they've been with their bank for more than 25 years. The biggest group was that 1 to 5 year bucket, where it was almost a third. It was 28% of people said they were new, but not terribly new, between 1 to 5 years with their bank. And what we were actually asking them was a range of questions. Initially, how do they feel about their bank? How likely are they to recommend their bank? And then specifically about interactions they've had with their bank, regardless of whether they are face-to-face, through self-service, or whether it's over the phone or by email. And then we're able to analyse those results. We were particularly interested in the impact that interacting and not interacting and using different channels and self-service would have on key customer experience metrics. So we asked 3 CX metrics, 3 customer experience metrics. Initially at the front end of the survey, so it will be as pure as possible and not be biased at all. We asked about Net Promoter Score. How likely are you to recommend this bank or credit union to a friend or colleague? So that's measured on an 11-point scale from 0 to 10. Then we asked about customer satisfaction. So overall, how satisfied are you with your bank, measured from very dissatisfied through to very satisfied. And then we also asked about customer effort, which may be new for some of you, but it's when thinking about your dealings with your main bank, to what extent you agree or disagree with the following statement: my bank makes it easy for me to handle my issues. It's measured on a 7-point scale. So from strongly disagree to disagree all the way up to strongly agree. And I'm curious with the group that we have here, I'm curious what metrics you actually use in your operation. Maybe not you personally, but you know that your organization measures. So we have a poll that's going to pop up now. If you could just select all that applies of those 3 metrics, which ones do you currently measure in your organization, or does your organization measure? Interesting. I can see the results flowing through very quick, thank you. I'll give another like 20 seconds for you to consider. I had a hypothesis about what would be the most common, and I'm right in that. We'll share the results in a moment. I'm a bit surprised about customer effort, but that's interesting. Okay, 5 more seconds. 3, 2, 1. Can we end and show? So Net Promoter Score, not terribly surprised how many people selected that was the primary one. Net Promoter Score seems to be a metric that has become very embedded in particular industries. It's not the most common metric for every industry, but in financial services, it seems to be a go-to metric. We've seen that a lot since our book was published, The Ultimate Question. CSAT's fairly strong there as well. I'm a bit surprised how low customer effort is. But we'll be using these 3 metrics, and we're going to split them in various different ways to show you the impact of interacting, not interacting is. So I will stop sharing that now and go back. You should be able to see my slides again now. The first thing is, let's just look at NPS over time. So Net Promoter Score over time. With the exception of 2018, which is not the only year that was impacted by the Royal Commission, but when there was a lot of discussion about the findings of the Royal Commission and the insights from it and what was coming out. So 2016, 17, 19 and 20 are relatively flat. So a range from between 14 and 24. Maybe it's gone up, maybe it's gone down. Some of it could be sampling. So there's been a small amount of variation. 2018, a very significant difference. That's where the Royal Commission, primarily discussions, at least in the media, were happening. Which, as I was looking at the data, led me to think, well, kind of what has happened? What has happened with the Royal Commission? What are people's perceptions of that? So we've been asking a question about the Royal Commission for the last 4 years. In 2017, you'll see the question on the left here from 2017 to 2020. And it's really just a tense changing as you move up. So 2017, will the proposed Royal Commission improve banking customer experience? Then will the ongoing, then will the findings, and then have the findings. And the 2 bars, we've split out the big 4 banks from the other banks. So if you're not in a big 4, we group them all together in other, because you can see some interesting trends in that regard. And 2017, 2018, 2019, the numbers change, but there's essentially no difference between customers from a big 4 and customers from other banks. But 2020 is where I find a really interesting piece of insight there. So 2020, the current survey, 45% of big 4 banking customers agree with the statement that the findings from the Royal Commission have improved banking customer experience. Whereas, so that's almost 1 in 2, whereas it's less than 1 in 3 for the other banks. So a smaller proportion of non-big 4 bank customers believe the Royal Commission has improved banking customer experience. As I said, it's almost 1 in 2 big 4 customers agree that banking customer experience has improved as a result of the Royal Commission. But let's look at NPS by those categories, NPS by the big 4 versus other. So big 4 we have as +9 over the lifetime of this, so over the last 4 or 5 years. Other banks at 27. Most customers been with the big 4, so the average is much closer to big 4. Across the industry, we see an NPS of +14 with a +18 gap between the big 4 and the other banks. So there's quite a large gap between big 4 and other banks. And that finding is not terribly surprising, but it makes you think around what might be driving that and what are some of the different factors behind that. So one thing we looked at was by tenure, and I should preface the findings that we're sharing here in about 20 slides worth of content from potentially about 40 or 50 slides worth of information. So I'm not going to show you everything. I'm just going to highlight some things that I hope will give you some insights, give you some actions that you can take away, but also create more discussion around it because it's quite interesting, some of these findings. But firstly, by tenure, what we find is there appears to be a honeymoon period. For customers who have been with their financial institution, their bank, for less than a year, the NPS was positive 38. Then there seems to be a big drop. So less than 12 months, it's positive 38. 1 to 5 years, it goes to positive 19. So a 50% drop. In the first year to 2, 3, 4 years, there's a 50% reduction in NPS. Then 6 to 15, it went up slightly again, and then above 15 years, it's down again around 13. So this is not necessarily a causation. It could just be a correlation. But I think it's interesting to note that there seems to be a big shift between the first 12-month period with a new organization, a new bank, and the following 2 to 5 years. Something seems to happen at that stage, or something impacts them. Maybe they just thought it would be better than what it was, and then the reality set in. But interesting to see that there's a link between tenure and Net Promoter Score. We also see a link between customer age and Net Promoter Score. So working from the bottom up in terms of age groups, from 18 to 29, NPS was positive 15, then dropping down 10 and 8 for the following 2 age groups, and then the highest being positive 27 for the 60 years or above. So the oldest group of people in the survey had the highest level of Net Promoter Score, which again, I think is an interesting point, and it may point to the fact that we need to differentiate our service and meet the needs of customers at different levels in their lives, and maybe organizations are not doing that as well as they could. But it's not necessarily very actionable in the sense of if you're going to improve your Net Promoter Score, I suppose based on this, on only this factor, you could argue we need more older customers in our bank. But you're not going to churn younger customers for that. So it doesn't make sense. So what I want to do though, is move away from talking about demographics and talk about the value of NPS, and then some practical things you can do in your operation to actually improve NPS. So starting with the value, there's 2 slides on this point. Firstly, we broke it down by products. So we asked customers, what products do they have with their bank? Like, do you have a credit card? Do you have a home loan? Do you have a car loan? Whatever it might be. We found there was no connection between when they said they had 1 or 2 or 3 products and their Net Promoter Score. However, the customers who had 4 products or more, they had a significantly higher NPS score, so a positive 22. So there doesn't seem to be a link between NPS and having 1, 2 or 3 products, but for customers of 4 or more products, they seem to have a significantly higher NPS score, positive 22. But NPS as well, if you recall back to that second or third slide where I actually showed the question, it's not asking what you have done. It's asking how likely are you to do something. So it's just intent as opposed to actually doing something. So we threw in the actually have you done something question. So we asked Net Promoter Score, but then we said, actually, have you recommended your bank to a friend or colleague in the past 12 months? And then based on Net Promoter Score, and I'll just rehash it if you're unfamiliar with it, it's from 0 to 10. Customers can score 0 or 1 or 2 or 3, all the way up to 10. 9 and 10s are considered promoters, 7 and 8s are neutrals, and then 0 to 6 are detractors. And then I've cross-reference that with their response to the question of how have you recommended your bank? So not how likely, but did you actually do it? So 68% of people who said that they were likely to recommend their bank, so 65 who said they were likely, said they also had recommended their bank in the past 12 months. 40% of people who were in the neutral category said that they had recommended, and 18% in the detractor category. I think that's quite an interesting finding. Not that people who say that they're likely are more likely to have actually done it. Like that kind of makes sense, that if people seem to have a high level of commitment to doing something, more of those people will have actually done it. That's kind of logical, I think. But the whole methodology of Net Promoter Score is that if someone scores you a 0 to 6, they are a detractor. And if there's an opportunity for them, like in natural conversation, to talk about their bank and provide an advice or opinion, they will say, I do not like my bank. I recommend you don't use my bank. Don't go to them. But this is actually saying that of that detractor category, we still have 1 in 5 of them, a relatively high amount. It's 18%, not 20, but basically 1 in 5 are still saying, I've recommended my bank. I'm a detractor, but I've recommended my bank, which I think calls into question a little bit the thinking around Net Promoter Score and the ultimate question. And I want to talk about that a little bit further on the following slide. But we do see that promoters are significantly more likely to recommend than detractors. So 3.6 times more likely to actually have recommended compared to the detractors. So 65 compared to 18. So the next point that I wanted to drill into is essentially break down those 3 customer experience metrics. So customer effort score, Net Promoter Score, and customer satisfaction. And these are 3 separate charts here. Net Promoter Score in the middle, customer effort on the left, and customer sat on the right. And the bars are actually how likely or what proportion of customers are likely to churn. So the question was, how likely are you to change your main bank in the next 12 months? And we can break this down by Big Four and other banks and by particular banks. But at the moment, we just broke it down by the satisfaction questions, by those NPS, customer effort, and CSAT questions. And what you see is that on customer effort on the left-hand side first, 33% of people who disagree or are passive at that level of, I don't think that my bank makes it easy for me to fix my issues. A third of those customers also said they are likely to leave their bank. And that just trails down until you get to the S agree, which is a strongly agree, the highest level you can score that question. 1 in 10 people who strongly agree their bank makes it easy for them to fix their issue are still saying it's likely that I will leave my bank. And then a super similar relationship for NPS. For detractors, 1 in 3 people who were detractors say it's likely that they'll leave, compared to only a third of those for promoters. So 1 in 10 people, again, the same number basically, 12% of promoters so that they're likely to leave. So even the people scoring you 9 or 10, the most engaged customers that you have, 1 in 10 of them say it's likely that they're going to leave their main bank in the next 12 months. And then a similar pattern, slightly different numbers with customer satisfaction. A group, the very dissatisfied, the VDSAT, and the dissatisfied together. So 56%, 2/3 of those customers, so not 2/3, over 1/2 of those customers, 56% of the very dissatisfied and the dissatisfied are saying that they are likely to change. And that continues down to the customers who are very satisfied, the VSAT, 1 in 10 again. And my thought about putting this in and showing it to you is not that people who are happier are less likely to leave. I think we can accept that, and that seems true in many aspects. But what is interesting is that often there's a lot of discussion about which measurement is the perfect measurement and what one meets our strategy and the needs of our business. And I've seen organizations spend a significant amount of time discussing measurement of customer experience. Customer effort score, CES, NPS, Net Promoter Score, and CSAT, customer satisfaction, they all show a very similar relationship, not just to customer churn, which we see here, but to other metrics as well, like how likely, not how likely, have you recommended? We see a really similar relationship. So kind of the takeaway point here is, I think as an industry, we need to spend less time doing workshops and discussions around the perfect measurements, and we need to spend more time fixing problems, actually driving improvement. So that's just one takeaway at this point. Let me though click ahead, and I'm going to drill into NPS a little bit more now. This is the only slide that is not one of my slides, not from the COPC CX analysis. This is from SAT metrics. So the organization is partly behind the Net Promoter Score system. And it's broken down by industry, and the colored circles that you see there are the NPS scores by industry, and this is a North American piece of data. So it's not relevant in the sense of, it's not Australia, but the point is more about the industry and the ratio that we see. Because when you're looking at Australian organisation, we see a similar breakdown by industry as well. So there's a pattern here, a pattern beyond the blue, yellow, and red that you see. And the pattern, this is a bit of a hypothesis based on looking at this data for a long time and working with MPS for 10 to 15 years. The pattern is that I've used the term active, so I need to explain what that means. But active industries, those that customers actively consume, consciously make an effort and are thinking about and are engaged in the process, such as shopping or entertainment or consumer electronics, have a higher NPS. And passive industries are those that you consume without almost thinking about it, tend to have a lower NPS. There seems to be a really clear link between how active and how passive the experience is, or how experiential that experience is. So let me give you a really specific example. When you go home tonight, or I'm in Sydney in Australia, I imagine most of you are in Australia as this nature of the data here. And most of you will probably be working at home today, so we might all be at home. When you go into your kitchen tonight to make dinner and you turn your light switch on, I imagine the light turns on. The fact that it turns on, I don't think you pause for a moment and say, I'm so thankful to Energy Australia or Origin that they provided electricity and the light turns on. I'm really engaged with them as a customer. In fact, I don't think anyone actually thinks about it, unless you've had a recent fault and you weren't sure it was going to actually turn on. You just turn the light switch and light comes on. Whereas other things like actually going into a department store and shopping, the one you see all the way at the top here, or engaging with your, like using your phone or like your actual what device, they're more things that you choose to do, things that you enjoy doing potentially, like online entertainment. And they are things that you consume consciously. And there seems to be a link between NPS and how conscious or how passive you are as you are participating with these organizations. So we see this ratio, well, not this ratio, this pattern, I would say, by industry globally. So I think that's interesting. And that kind of thinking got me to consider, well, I think banking is probably more passive than it is active. I know the process of choosing a bank is very active, as you might look at different options and look at interest rates for your home loan or credit cards, whatever it is. But actually, a lot of like the interactions from a bank would be like tapping your card and making payment. And I don't think that's I don't think that's kind of an active thing. It's more of a passive thing that you do, or automatically paying a bill or something. But some of the people in this survey had contacted the bank in the last 3 months, had gone into a branch or made a phone call, email, or had some self-service. Some of them had had an engagement with their bank, and some of them had not. Some of them had just been a bank customer and for the last 90 days had no interaction with their bank beyond making payments. And if more active industries typically have higher NPS and more passive industries typically have lower NPS, what is the impact of someone contacting you? What happens to NPS if someone has contacted you or has not contacted you? And we front-loaded the NPS question. We put it at the front of the survey before we asked anything about have you even contacted them. So it shouldn't have been the framing effect that came into the findings. They shouldn't have been thinking necessarily about the most recent, they're thinking about you as an organization. So with that longer than perhaps needed discussion, let me show you the findings of that. So of the people, of the consumers who had a bank in Australia and had not contacted their bank, NPS was positive. It was a +4. If in the last 90 days they had contacted their bank and it was a really good experience from a you fixed my issue first time, I contacted you once, you fixed my issue, NPS has jumped up from +4 to +34. So what is that, like it's 8 times higher roughly if they had a positive experience in the last 3 months. If it was less than positive, but we still fixed it, but it took 2 or 3 or 4 contacts to fix it, NPS has dropped down again. And then if you didn't fix it, if they've made multiple contacts and you just didn't resolve it, NPS has gone down to -22. And again, the question was at the front. We haven't yet referenced the interactions, but there seems to be a resting heart rate to Net Promoter Score and engagements with you as an organization. As they have engaged with you, or if they do engage with you, that has a significant impact on their NPS. The resting heart rate in the industry is +4, and then it goes up or it goes down based on what actually happened. And if we think about that in a little bit more detail from an interaction point of view, the customers who are resolved on their first call based on this data, they're 4.5 times more valuable from an NPS perspective than the customers who are resolved on 2 or more calls. So NPS was 4.5 times higher for customers who fixed first time compared to fix second or third time. There's a really significant impact on interactions and how effectively we manage those journeys or those interactions with customers. The other thought that came to mind as I was looking through this though, is what about the customer somewhere in between? They had a contact, but did they try self-service beforehand? So one question we asked in the survey was, did you try to find the answer to your inquiry online before contacting your bank? And I'm very curious about perception versus reality here. So I know the answer to the question, perhaps a little bit unfairly. I have the data, so I know the answer, but we'll load up a poll. The question is, what proportion of customers who contact you tried to find the answer online themselves? We have the full range here. Just select one of these. So from 0 to 10, 10 to 20, 20 to 30, all the way up, maybe 100%, maybe everyone, whatever you think is reasonable. We'll give you some time to put your answers in. As a spoiler alert, most people are not right at this stage. I'll give you another 10 seconds to click on one of those. I should point out what I'm going to share with you in a moment is across the industry. And perhaps you are right for your bank, but the data I'm looking at is across the industry and then also broken up by Big Four versus other. So depends on what category that you fall in. Okay, let's end that poll, Lena, and can we share the results? So the largest group, a third of people said it was roughly a third. 1 in 3 customers try to find the online answer before contacting. The highest response we got was 80 to 90. So almost every person who calls you has tried to go online first. And then 1 in 10 people, a little bit over 1 in 10, said it was very small, less than 10% of customers. So I'll stop sharing that and let me show you the results of the survey. Okay, so I broke it down by age group because my hypothesis was that kind of how comfortable you are with technology is probably linked to age. And if you're more comfortable with technology, you're more likely to ever try to find it online yourself. But across the industry, over this period, 56% of people attempted an online resolution prior to contacting. So more than 1 in 2. The biggest group were younger, so 18 to 29s, 71%, more than 2 out of 3 customers in that group attempted online. 68 for 30 to 44s. And then down to around 1 in 3 for older groups, so 45 to 60 and above 60. But 1 in 2, so 56% of customers attempted online. And this stat is one of the stats that shows quite a big difference between Big Four and other banks. So percentage of responses who attempted online resolution, Big Four had the largest proportion. So 64% of Big Four customers said before I contacted them, I did try it online. I didn't find the answer online, so then I contacted them. For the other banks, it's 32. And I think firstly, that's really interesting. I wasn't expecting such a big gap. So essentially it's 64-32. Big Four bank customers are twice as likely to have attempted self-service prior to contact. I think that by itself is interesting. But if I was from a Big Four bank, my concern is I have a lot of cost in my contact center and my retail network. 2/3 of people tried to solve it online and couldn't and contacted us. That's a tremendous opportunity. What's happening with our online system that results in so many inquiries not being resolved there? And also not from a Big Four, and I'm at 32, that's still 1 in 3 customers. But maybe Maybe it's 1 in 3 because our website's fantastic and it has so many options and features and it's so intuitive that people go there and they find it. But I don't suspect it is. I wonder if customers have just learnt that it's easier to contact us for another bank, and actually maybe the self-service options aren't as powerful and aren't as robust, because chatbots and interactive websites and constantly upgrading your technology is a lot of money, and it's easier to do that relative when you're a larger organization. Either way, I think this speaks to an opportunity across the industry, tremendous opportunity, for at least from a cost point of view. So let me summarize a few of the points. I've gone over the time I said I wanted to talk for, so I'll leave some time for Q&A. But firstly, from a measurement point of view, NPS is a really good indication of what your customers are thinking and what your customers are likely to do. It's a good indication of whether they will actually recommend. It's a good indication of whether they are likely to leave you. It doesn't seem to be much better though than customer effort or customer satisfaction in terms of that indication though. So in the conversation of NPS, CES, CSAT, the metric doesn't really matter. Driving improvement is what matters. More focus needs to be given to projects that are improving the customer experience and less on discussions around the perfect measurement. I'm not sure there is a perfect measurement, and most of the measurements seem to be strongly connected anyway. Second takeaway tied into the previous slide. 1 in 2 customers attempt online self-service before contacting their bank. So we need to, as an industry, we need to improve online experience to reduce customer effort. And we know that if customers are resolved first time, they're far more likely to have a higher net promoter score. They're less likely to say that they're thinking of leaving. They're more likely to say that they have referred their friend or a colleague to their bank. And as well, like if we can cut out half, 2/3 of our volume, that's a tremendous reduction in our operating cost. So I think every bank has a tremendous opportunity from an online perspective. And then the third point is that customers seem to have a resting heartbeat of engagement. They're a low effort resolution, so fixing it first time, will drive up NPS. But if there's multiple attempts before it's resolved, or even worse, there's multiple attempts and it's not resolved, there's a tremendous drop in NPS. So to improve CX, banks need to simplify the service journeys. For instance, like the journey to refinance your home loan, that's never done in one phone call typically, or one interaction. The journey to apply for a new product, the journey to contest a charge, whatever the key journeys customers go on, regardless of whether they initially start on the website or in the retail shop or with a phone call or email, whatever your key journeys, whatever the strategic ones are based on your volume, based on your voice of the customer, based on the cost, based on your strategic focus, whatever those journeys are, you need to spend a tremendous amount of focus and energy making sure it's easy for customers, making sure you're resolving as many as you can on the first interaction. So they're 3 of the findings. As I mentioned at the start, there's quite a lot of findings. They're just 3 of the findings and 20 of the slides that I've taken you through. There's a bunch of ways you could take action in terms of moving forward. And as an organization, CFSC has a lot of experience in the financial sector supporting organizations. We support you with CX consulting strategy, where we can go in and we can map out your most common journeys, identify those pain points and where the fail points are, and help you to redesign those. We can optimize your operation as well. We can focus on customer experience or on cost or quality or recruiting and training. We also do management training ourselves, and we can also do certification where we can benchmark you against world-class organizations and help you to improve your face-to-face operations or your back office or your over-the-phone email. But that's very broad because kind of we support CX operations in every aspect. I think if I was in your shoes, the question I would be asking myself is, I can see these findings that Alex has shared with me, but kind of, so what does it mean for me? What does it mean for, like, to just pick out a random name, for me as a manager at Suncorp? How do we actually compare? And what I would encourage you to do is essentially consider engaging us to create this presentation, but specifically for you, so we can compare you to the big four banks, or to compare you to the other banks, or compare you to your direct competitors, and help you to understand exactly, based on the voice of your customers, where do you sit, where is it pain, where are you better, where are you worst, and where you need to take action to improve. Because essentially, you can't improve performance unless you can manage performance, and starting to measure the voice of your customer will give you that insight and help you to drive improvements. So thank you for your patience as I went over by about 7 or 8 minutes. So I have about 5 minutes now for Q&A. Lena, I wasn't watching the questions as they came in. I was just sitting here.
I definitely was. Fortunately, we don't have too many questions, so you should be able to answer them within that time. We had a couple of questions come through about what sort of metrics we should be using, which you sort of answered by saying it doesn't really matter. But just to call out the questions, particularly someone mentioned that they use customer expectations instead of effort. And someone also mentioned whether customer effort is a relevant metric when to regular type of calls versus calls that are only related to handling an issue. So for example, inquiries.
Yeah, so there's 2 parts of that. Let me try to do the 2 parts, and then I'll just forget it, honestly, if I go beyond 2 parts, so you can answer, you can give me the 3rd part. In terms of expectation, there's a real danger of trying to understand expectation rather than derived importance. So what customers say, if I can paraphrase it to say it in a different way, what customers say is not necessarily what they really want. So we've done a reasonable analysis where we've asked people, what do they want? How fast do you want to be answered? Do you want to speak to someone in Australia with an Ocker accent versus speaking to somebody offshore? And then we've also done the analysis and looked at engagement based on the interaction when they did speak to someone offshore, or when the call was longer or shorter. And a lot of the things that customers say are important to them are not actually important. So I'd be wary if you're using key metrics if your key metrics are based on what customers say they want, as opposed to based on actual statistical analysis where you derived the importance. So that's my first slightly longer answer to the first point. The second point, I said I could do 2, Lena. I've actually forgotten. What was the second part of that question?
The second question was about whether customer effort is a metric that should be used for issues that are...
Yeah, sure. I actually think that in a holistic voice of the customer program, there is a place for Net Promoter Score, there's a place for customer effort, and there's a place for CSAT. They fit into understanding your customers in a slightly different way. There's differences in how they're approached. I think probably customer effort is not best placed when there's just a phone call and email that you're responding to. I think it's probably best placed for a journey. So think about a home loan situation. You apply for a home loan. I imagine a reasonable number of people would do that initially online, or they initially do it in the retail shop, and then they might have to go and send forms. So there's a number of steps to apply for a home loan. I don't necessarily think asking about the effort of getting the home loan application printed out and given to you in a retail branch is a good use of that question. I do think it would be really powerful at the end of the home loan application process. So that we would call that a service journey. At the end of that service journey, they got approved, they got rejected, asking at that point. So I think customer effort score, really good metric for measuring the effectiveness of your service journeys.
Thanks. So that's actually related to another question that we've got that's come in here. Do we have a breakdown of NPS by customer journeys? Well, ideally service journeys, but in this case, we're being asked for customer journeys, for example, home lending versus unsecured lending.
Not in this report. We have a breakdown by a few different ways though. We did break it down by the customer's perception of the interaction. So we said, do you think it was a complicated or a simple one? We also broke down like what was the nature of the inquiry, like was it customer service inquiry, was it complaint or whatnot? But we didn't look at journeys in this, in the sense of like what was the service journey that you were on and how much effort was that service journey. We have done that though for banks in Australia in consulting engagements where we've mapped our key service journeys. So the one I was a part of was the home loan application process. And that's where we looked a lot at the amount of effort customers go through. And honestly, having gone through the pre-approval process multiple times, it's a super painful process with regardless of which any bank I've been with. It's super painful.
Thank you. And we have a really interesting question regarding the churn statistics that we showed. Considering how likely it is for customers to churn, even when they are happy, would you feel that banking is becoming a switcher's market? The product is being commoditized?
Yeah. I think that if you ask the government, so which drives a lot of the regulation around that, I would say they have actively tried to reduce the cost of switching to make it a more competitive industry, so customers can essentially change banks. I'm thinking specifically of home loans in this situation, which is where traditionally customers were locked in. If you listen to the media, when politicians are talking about the RBA and the recent interest rate cuts and whether banks have passed on or not, they're constantly encouraging people to compare and then switch. So I think that probably there is it's far more commoditized now in 2020 than it was in the past, and I suspect it will continue to be there. I think to add to that point though, the likelihood of switching is driven by a lot more than just a phone call or the experience they had. It's very hard for a customer to be loyal to a bank if they realized it means they're paying a significantly higher interest rate on their car loan or their home loan or whatever it is. So we need to consider it's also about the product and the pricing and the features and the convenience of engaging, like whether you have branches nearby and whatnot, more than just that phone call or whatnot. So the simple answer is yes, I think so.
Awesome. And I've just got one more question here regarding the way that we surveyed our customers. So were the same respondents surveyed each year for 5 years?
No, they weren't. So it was a panel discussion. So we engaged a panel. So it was a representative group of people across Australia. And we engaged different panels over that time, like through the same process, but we weren't collecting identifiable information. So we don't, I suppose there's a potential that we have similar people or the same people in the survey each year, but it wasn't asking the specific like Alex Boland in 2016, 2017. So probably not.
Awesome.
Unlikely. So thank you, Lena. If there's more questions, I will try to figure out where they came from and get back to you. What I've included here now is just my contact details, a comment about service journey. Many of you, I imagine all of you actually would have an email from Lena, if not myself, but please reach out to us. We're very passionate about data and about the insights and the power data gives you to understand your customers and what that means for improving performance. So reach out to us. We'd love to be a part of that conversation and support you to drive that forward. Thank you for your time today.
Thank you. Have a great afternoon.